What is up, guys? It is Stu, and it is another episode of the What the Fuck Gym Talk podcast. And I have got Shawn and Amanda Hanquist on, and the Hanquistes, is that how you pronounce it in plural? Hanquistes? Hanquisti?
Hanquists.
Out of my league on that one. Yeah.
They are the owners of FitCFO, and we didn't even get a chance to really interact at an event that we were both speaking at and vendors at this event in Nashville earlier this year, but we got to connect afterwards and wanted to have them on the podcast to talk because math is not something that came naturally to me. I was a kid. I had the algebra tutored for like the SATs and all that. But I always was something stuck out. My grandfather said 2 skills you have to have. He's like, I really don't give a shit what happens to you in school outside of your ability to problem solve. And that comes in basic math, like pre-algebra to algebra. It's like the good basic problem solving you have to be able to do. And you have to be able to take your thoughts and put them into the written work. So be able to write, be able to do some good basic math, and you probably won't fuck up too bad. And I always took that to heart, but the math part was always, the math part was always my weakest one. And I was the gym owner in the beginning. I always joked around. I have Bank of America. So I had a blue business debit card and I had a red personal debit card. And I'm a young entrepreneur. Guess what? That red one pretty much stayed at home. Everything was a business expense. And I remember my CPA at the time, and it was just I couldn't afford like a bookkeeper. I was doing all my reconciliations monthly by myself with QuickBooks. And I remember he's like, bro, you're spending $8,000 a year at Tiber Creek, which is like the Irish pub down the street from my house. I was like, and that's when I realized he's like, I can't write off even meals and entertainment. And we could, it's just like, take it out. And so I got rid of my blue card syndrome and I started paying myself. I'm like, okay, I just give me myself my own money and I'll go play with that. Talk to me, guys. At what point are you finding people come to your service? Is it early on, which we all wish they would, or is it like after they've maybe had a couple years of financial distress, or the first time taxes are due and they've actually made money?
I wanted to say, first of all, the funny thing is your story is familiar because we were young gym owners at one point as well.
Yeah.
I don't know how many beers we bought and chicken breasts that we bought after the workouts. It was unbelievable. And then you never know what is what, and you can't run a true business not knowing the true business numbers.
And you always think it's dollar for dollar, right? In your head, oh, it's a write-off. I'm like, bro, it's not.
You don't realize you're spending $1 to save 30 cents.
Exactly. Exactly. So we were talking before we kicked on here real quick, and if you guys, we'll do this part properly. This is always, in my opinion, whenever I listen to podcasts, this is the most boring part. Not that people are boring, but because I want to get into the guts of it. So if you guys wouldn't mind, take 2 minutes, each of you, and just kind of, how did you get from where you were when to where you are now? And how did we arrive here at FitCFO? Whoever wants to take it.
Well, I have a very unique background. I became a financial entrepreneur early on. So I went to college for one thing, completely changed gears because I wanted freedom. And
what college you go to?
So I went to the University of Nebraska at Kearney. So we're right in the center of the United States. And I have a degree in interior design. So total 180, but went down the financial route because it allowed me to own my own insurance and financial services agency. And so I grew that to one of the largest of its kind in our state. And it was very successful. Along the way, I experienced, some things that led me down the health and fitness route and went into the health and fitness industry. Started out with the online space and coaching. And then we were going to a lot of conferences and things like that. And we realized, wow, there's a lot of these online entrepreneurs out there that really have no idea what they're doing in business. And so that's where this concept of FitCFO really came to be at one of these events. But Shawn can tell you about our experience as gym owners and really how it kind of stemmed from there as well. So we have kind of a long history in both financial and health and fitness industries.
Well, my journey started out in the financial services as well. And I've always been an entrepreneur. So right out of college and within about 2 or 3 years, I was already buying a gym. Took out a $500,000 loan that I didn't have any business taking out.
Are you from Nebraska as well, that area?
Yeah. Born and raised, small town farm kid, grew up on a dairy farm. Absolutely love it. You know, we love traveling to the big cities like Nashville, where we met you, and Scottsdale. It's awesome, but this feels as home. Cool. But yeah, so we got in the financial services industry and then owned multiple businesses along the way. Owned the gym for 5 years. And like I said, we took out a big business loan with a huge lease, and we had no idea, obviously, what we were doing.
What kind of gym was it?
It was an Anytime Fitness.
Oh, great. Okay. So at least you had the support of a franchise system, a proof of concept was there, that kind of thing. You weren't just winging your own personal training studio or open gym model or anything like that.
Yeah. And honestly, I think it was kind of a detriment to us because we bought an existing business that had cash flow, and we just, the bills got paid and there was a little money left over in the bank, and we never really probably took it serious as we should have at that time, until more competition came into town, raced to the bottom of rates. And all of a sudden now there was less money in the bank account every month. And when you have a $4,300 loan or something like that, and a $4,500 lease payment, shit starts adding up quickly, and started sweating bullets, honestly.
Absolutely.
Yeah.
So is that, so it just self-correcting your own financial woes? And then how does it go to the first, was it like, okay, when did you exit the gym ownership scene?
After 5 years, when I kind of determined that, man, I just don't see me, because I had a full-time job in the financial services industry, had a business partner that was managed it day to day. And it's like, I just didn't see light at the end of the tunnel. And I'm like, let's sell before we get in trouble here financially.
Sure. Okay. So you sell in, and then what point you're like, okay, let's take our unique and adjacent financial experience and aim it at a niche.
Good question. Well, Amanda mentioned this here, so I'll kind of come back to that. But Amanda mentioned her successful insurance agency. And so this was about 2012, 13, we sold the gym. And then that's when the real work started for us. If we started learning about business, reading, studying. And it was probably, 2015, 2016, I'm just guessing here. Amanda's insurance agency had tons of cash flow, but then again, we just had no idea where it was going, how to do anything with getting ahead. So we started implementing some of the research and studying we did. And one of them was Profit First. We read the book by Mike McCallowicz back in that 2015-16 range. And we started implementing some cash flow strategies.
Well, because I don't know if you know anything about the financial services businesses, but they tend to have a lot of recurring year over year revenue. And so like I said, I grew a lot pretty quickly. And I worked really hard to do it, but I grew really quite a bit in a kind of a short period of time. And so we had a huge amount of cash flow. And of course, for a while there, I'm like, lottery effect, this is pretty fun, but then eventually it's like, all right, we got to see a future in this here. We got to maybe even see an exit at some point. So that's when we kind of started learning a lot more about what that actually looked like.
We started learning about business numbers. We started learning about respecting the business. We started learning about, and it's not a dollar for dollar on the write-off. You spend, money on stupid shit, it's all gone. You lost that dollar. And we started implementing cash flow strategies. And it was within about 3 years, we turned that business around to having a huge financial exit. And it was a very sellable business because we did up our game and started focusing on business. So that was kind of where the strategies and how we have like proof of concept that we know in business. And if you can handle the cash flow and understand the numbers, it can just change your world and change your life immediately.
And so the businesses that you were mainly doing cash flow strategies and all that for, were they small, but were they a specific sector? Were they gyms, or was it already the fitness industry, or was it just small businesses?
It was our own personal businesses that we were running.
Got it.
And then I was in a big financial firm. So I'm a certified financial planner, and there's just not a lot you can do in those big firms. This is about 2017. We met an influencer in the fitness space, Jason Phillips. I don't know if you're familiar.
Absolutely. Yeah. Nutrition guy. Yeah.
Yep. Good buddy of mine. We went to his events. That's how Amanda started in the nutrition coaching. That's how we met Tim Lyons and how we got to the Nashville event. But Jason, we went to one of his events and questions started coming up because Amanda was there for the nutrition coaching because she was really intrigued by it. And all of a sudden some questions were coming up, and I kind of told people what I did. And now all of a sudden, Jason and a couple other people in the room started asking me questions about financial things. And it's like, okay, didn't think anything of it. And then Jason afterwards is like, I think we got something here.
Yeah.
I think we need you for the early entrepreneurs in the health and fitness space, because we need help on the finances.
Yeah.
And then that's when we launched FitCFO as a business financial coaching company.
And so it's interesting because there's like someone's listening, it's like, okay, so what is financial coaching? Is it bookkeeping? Like, again, let's take it to the profit first. Like, is it essentially where should my money be allocated into those various buckets? And for anyone listening to this, I've had McAllowitz on the podcast. They've probably heard me talk about Profit First from Microgyms that Briggs wrote. So if you're not familiar with it, I need to bring you up to speed. I don't want to spend too much time on this podcast doing the 101 on it, but where does that really exist? Because most people they basically come to you for CPA services
now.
Yeah.
It's unbelievable how it just kind of a 180. It started as a coaching company to help people obviously get structured, get business bank accounts, get personal out of business, get the entity structured, get QuickBooks set up, get the right counseling, get the personal out of there, and then start
really acting as like a CFO for their business.
Right. So like a business
going.
side, if you're looking at, hey, marketing was 10% last year, now it's 17%, but we have no additional revenue accounting for that. What are we doing? What's changing? So having those conversations, and obviously it took them to have the numbers to be able to come to those meetings. So we saw a lot of success, but what the pain point happened over time was we just couldn't get good numbers. We couldn't get the bookkeepers to get the books.
We had no data.
The coaches at the businesses we were working with, they would say, I'll just do my own bookkeeping, but then they wouldn't be done with the books and couldn't
so
get
you had to bring the bookkeeping and stuff in-house just to be able to deliver the end goal, what you promised them or what they were expecting from you anyway.
Yep. So I had a relationship with another accountant. She's been an accountant for 20 years, built multiple big businesses, and she was looking at making a move, and she came on board and brought a whole team of her accountants with her. And we went ahead and launched FitCFO as a full service accounting firm.
What year was this?
Just last year.
Okay. So last year, so we got the full service accounting. You guys are doing monthly bookkeeping?
Yep. Monthly bookkeeping. We do the payroll. We do the tax strategy, like year-end tax planning. We do tax preparation, and we're also doing a lot of coaching within that model just to keep people accountable.
So the big thing, like tax strategy, and that's the phrase. So when someone's like, I have a CPA, and then when I first get a client, I'm like, I don't care you have a CPA. It's like you tell me you have pants on right now. Like I don't give a fuck, right? Do you have a tax strategy?
Before I got into this business and started understanding, I would have just shut up and, oh yeah, you got a CPA, you're fine.
Yeah.
Once we started learning about strategy, not every CPA is created equal.
Yeah, we look at the CPA as being more of like a commodity. Like they're gonna, get the data, make sure it's correct, and make sure it's compliant with the IRS, but they're not gonna be telling you your allocations, giving you strategy behind it. So there's a huge difference between the two.
And that's the big thing I always tell people. I'm like, cool, awesome. So we'll be talking about something. I'm saying, okay, so based on your tax strategy that you and your CPA have discussed, and then they're like, I don't really have one. I'm like, so let me get it straight. Are you literally downloading your QBOs into an Excel file, shipping it to somebody, at the end of the year, and then a couple email exchanges back and forth, and then you're signing off on your 1040, and they're like, yeah. I'm like, again, you can keep doing that, I guess. I don't recommend it. There needs to be constant. So for example, a couple of years ago, I'm talking with my bookkeeper who is attached to the firm that I use and all that. And it's like, I want to be able to buy a townhome here in Charlotte. It's going to be this amount of money, blah, 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 because a bank is going to look at an independent entrepreneur, and every bank and lender is a little bit different. Some of them want to see a fat salary, like an actual W-2 wage, and you being an owner, having a salary on the books. Some of them are good with a smaller salary and better distributions. And so you got to kind of get to your lender first, like, what do you prefer? And then you got to go to your CPA and be like, okay, this is what he prefers. And because they go back 2 years to look at the numbers, I want to have 2 good years the next 24 months. How do we deploy that?
Yeah. And that's why we talk a lot about that, paying taxes is not always a bad thing. If you're paying taxes, it means you're profitable. We got to show some kind of profits if you ever want any chance for lending in the future.
Yeah, no, 100%. Like, I don't want to pay taxes. Like, like, you know, everyone's like, but Jeff Bezos, I read an article, he doesn't pay that. Like, bro, like, but for us, these, you know, an average microgym owner that's going to do under $1 million a year, this is something where, again, some good strategy there's a huge difference in place.
Yeah.
Right.
Yeah. So that's the planning, because this year and next year we need to maybe pump up net income to get our house at a very favorable rate. Right. And then after that, maybe we need 2 or 3 years to start saving some money on some taxes and get some depreciation and changing some of our strategies that we're using to lower the tax bill. So it's not just a one-time strategy and you're done. It's every year that you're looking at that.
Yeah. Now, the thing that's really interesting about your shop is you've also obviously brought in what Shawn's background is in the wealth management, certified financial planner, and you've brought that in-house too with Fit Wealth Advisors.
Yeah.
Right. And I was even going ahead, I was looking at even your scheduling fee, where you guys are essentially, you know, and it's if anyone's worked with the CFP or anything like that, you know, a percent here, 1.25 for anything under $1 million. If you get up to maybe 3 or 4 million, they're going to drop it to a 1%, and so on and so forth. It drops down. Talk to me about that. At what stage do you bring in a conversation with someone with wealth management? Is it when, because you're obviously fully aware of how much they're taking home, you know, how much profit the business has, do you ever have that conversation with them? Like, hey guys, you know, currently right now you're sitting at about a good solid 20% profit margin. You don't have any plans to expand, open up a new facility, or have to get any traditional lending or loan of any kind. I know it feels kind of nice having that money sit in the bank for a rainy day, which, by the way, I don't know how you guys feel about it. The whole, like, you need 6 months of operating income in your checking account at all times. I think COVID proved that you actually really don't. Like, you don't need a full 6 months. Like, no, only gyms that were dying anyway went to zero, like died.
Yeah.
Everyone else, there's some gyms that went to zero revenue, and we were able to still make it through, and nobody was sitting on 6 months of fucking, you know, expenses.
I think that also obviously goes in within your like business plan for the year, right? If there's no major expansions, there's no reason to have 6 months, right? But if you're doing a build out and you want to do something different, maybe. But to go back to the when it's time to maybe seek out the wealth management, and there's never a perfect time. I would say sooner than later, because of the compounding effect. And that's kind of how I set up my advisory practices. You know, a lot of times you get in front of a good CFP, you're going to need $500,000 or $1 million of investable assets. Well, geez, I'm an entrepreneur, so I'm shoving all my dollars back into my business to grow it. So I don't have a lot of investable assets to get in front of a good advisor. So what we had done is we went ahead and just set up a model where you could pay for financial planning and get all the good financial advice you need, and not necessarily have to do the investment management piece. Yeah. So if you saw that we can do one or the other, it doesn't have to be all. But when I set it up like that, it allows you to start at a smaller, maybe moving down scale, allows you to start at a smaller amount, because I can still work with you because of the monthly financial planning. So if you want to do a $6,000 Roth or a $6,000 SEP or whatever, go ahead and get started, because that's going to compound over time. So it doesn't have to be a specific number you get to, just get started.
Yeah. And I think, go ahead.
Oh, but a lot of that, I take a very tax focus. So a lot of it depends on what we want to do with taxes. So we're doing tax deferred, you know, after tax, before tax, like how much do we want to do? Because we don't want all our money tied up in retirement accounts. The only reason we're going to be doing that is if it's an advantage for taxes. If not, we're going to keep money liquid, probably out of the retirement accounts. Yeah.
And for anyone listening, and maybe you haven't gotten too far into this education yourself, there are certain accounts that once you drop money in, and they are tax sheltered, but you cannot access them till you're at retirement age, 59 and a half, or whatever it is. Right. Like, so that's the part that's really interesting to me, because there are owners that, if you're listening to this and you're still working on getting this business to maturity, financial tax plan, tax planning, tax strategy, a bookkeeper and a CPA are probably 100% something I would say invest your money in immediately into that and get yourself straight. I joke around with people. So for this business, WTF, in 2020, I had 20 speaking event, offsite seminars, things like that booked for 2020. I got 2 or 3 of them in, and then the world shit the bed, right? The pandy showed up. So that's a huge chunk of my annual revenue gone. With just, and I switched over, and I simultaneously switched over to the firm I'm with now that does profit first. I took home more money in 2020 making considerably less. And that was just with playing 3-card Monte, 5-card Monte with with the money moving in the business, like moving here, you don't need this here, pull this back. And it was amazing for me. However, now when I think of like where things are now, and I've got CFP as well, it's so much interesting now thinking of everything I do. And my mindset around money is very future-based, is very long-term. And, thinking about stuff about like, hey, okay, I make this money now. Where do I put it? What do I do with? So I want my money working for me. Right. So I went and put a good chunk of all my liquidity into commercial real estate. And then once I built that back up, and now it's with the CFP, and he's placing it places. But then I got to the point where I want to really know where he's fucking putting it. Yeah. I don't want to just ship it and forget it like we all do in the early days with money in our business. Like, as long as I can pay all the bills, I really don't want to know too much. I don't want to get too much in my money. It's painful. But when it's not painful, I love doing my allocations every Friday. I do them every Friday, and I love, like Scrooge McDuck, I like grab my money and take it in this account and put it over here and moving a couple grand into my Fidelity. And like, I enjoy that.
You've literally described the difference between the early entrepreneur and then the more tenured entrepreneur.
Yeah. So let's say someone's okay, I'm at profitability. I've been working with with FitCFO. I've, got that part, and now I'm in that mature entrepreneur stage. What does that conversation of wealth management look like? You've got a mid-30s, married, 1 kid, and they're just trying to set themselves up for retirement.
Yeah, for sure. That's a very good question. And a lot of it depends, because you're going to get a lot of individuals that maybe want to live for the now.
Sure.
Right? So for
like speculative, like day trading, get on the Robinhood app. And
I'm going as in lifestyle.
Got it.
I'm okay not grinding 15 hours a day so I can retire at 50. I want to work 30 hours a week, travel with my wife, right? So we're not going to be stacking the money away as much, because we want to live more now. Mm-hmm. And that's cool. Like, you just got to find your path of which route you want to go. And then also it's going to depend on, are we creating a sellable business? Right. So like, if we have a sellable business, that might change the amount we're saving for our future dollars.
Yeah. Well, I mean, and also the thing in the fitness industry at like the reality of you actually selling the business is on the lower likelihood, but treating it like you're going to sell it, that practice is never going to go out of style from a long-term success standpoint.
Yeah.
So one thing I wrestle with a lot, even before I got a CFP, it's like, fuck it. I can open up my own Vanguard brokerage account, and I could go ahead and put it, go invest in target date index funds. And I don't need you and your 1.25% or your, I don't need that. In today's world, and there's a lot more people on Instagram that educate people on the easy access and the easy way to invest in the stock market, and how, the stock market's been returning, again, decently up until late. But even then, I see everyone, Bitcoin was up, Bitcoin's down, stock markets go up, stock markets go down. I mean, but it always,
I'm telling you, I had clients, I guess I shouldn't say clients. I had individuals, conversations with people that took out home equity loans when Bitcoin was at 60,000.
Oh God. Yeah.
There's lots of poor decisions. So that kind of gets into the point of working with a CFP, holding you accountable, talking through scenarios long-term. And I think you mentioned Vanguard, like them themselves, they issue a white paper of how working with an advisor can improve your returns like by 3% over the course of time. Because of the accountability and holding you like through the emotional sides of things of Bitcoin and recessions and COVID, right? And holding you to your long-term plan.
Yeah. Now, generally, will your ability, you specifically, I think you can answer this to the SEC with all the regulations, your ability to generate me a higher return compared to the index, even with your fee, is it a wash, or am I like a point above now, 1.5, like 1.5, like what? Sure. That's always been my biggest argument against this. And I obviously eventually bent and went and got one, like I use one, but I mean, I still have my Fidelity account that I've been just doing target dates in and just basic 500 indexes. And it's just like, but are you going to really beat the market and time it better than the market will? Maybe. And if you do, isn't what you're charging me going to be a wash?
Yeah, so that's kind of a two-part question. So the first part, we'd like to believe we could, right? But really, no money managers have typically outperformed the benchmarks over time.
Yeah,
they just haven't, right? Some do, and it's cyclical. There might be a decade that you can have a phenomenal money manager outperform the index, and then the next decade they shit the bed.
Yeah,
right?
Absolutely.
But I think the second part of this is why you're going to have higher. I shouldn't say returns, but you're going to have a higher. Yeah, I think we could correlate it to returns by holding you to the plan, because a lot of times people can't just sit it in the S&P 500 and let it go, because COVID's going to happen and they're going to sell when it's 30% down. And then they're going to get back up when the S&P is back up 30%, when they're like, oh yeah, everything's good again. And then 2022 happened with rising interest rates, and then it goes back down and they sell. And that cycle happens over and over and over, where then they just can't perform up to the benchmark themselves.
And that's the thing. So I guess that's the one where it's like, I think there's a couple of different kind of, you guys probably have terms for these avatars, but there's different kinds of people who want to invest money. And there's those that they want a quick return. They want this, whatever. And there's some that are like, again, it depends on what age they start getting into it, but they're like, hey, set it and forget it. And maybe that's where like myself and like they've kind of gravitated towards an index fund or something they could set it, forget. Because I mean, we can't deny the math. If you went ahead and took $250 a month and invested it into the S&P 500, and you did it every month for 40 years, that's about $2 million portfolio at that point. Like it's never historically not going to do well in a very crockpot like manner. I guess like what you were saying, that it's more or less, well, they need the money out now because of this occurrence in life. So let me ask you this. I have $50,000 of like money to do something with. How much do I keep in just like the brokerage account as cash for when shit hits the fan? Yeah. And how much do I invest?
Yeah. I mean, that's a case by case basis.
Sure.
Right. So that's the hard part. Like, and that's why having a plan is the world of difference, because if you set it and forget it, and now you come into a liquidity event that you need, and all your money is in, say, the S&P 500, and it's down 30%. Yeah. Now you need the money. Now you're pissed off because you have to sell when the market's down, versus you could have planned ahead and had some non-correlated assets or maybe some cash on the side to fund your liquidity event that you needed. And that's where people start making mistakes, is just not having a plan and not thinking of like future liquidity. So I think greed a lot of times, or maybe just not aware, if you don't know what you don't know, is what kind of kicks in.
No, 100%. And it's, for me, I think I got to talk about this like a hair maybe in my talk. Maybe not. I believe the number one thing that a gym owner has the greatest likelihood to retire early, like I did, and create wealth, is in real estate. You can get an SBA 504 loan with your business in there, and you have a great now you go to any bank right now as just a gym owner, like, can I have $200,000 to expand the gym and buy new equipment and flooring? They're like, go fish yourself. No, they're not really, they're not ready to be giving money to gyms again yet after the COVID thing, like for just stuff like that. But a building, like I've got a guy right now, couldn't get a $250,000 loan for the business in California.
Got it.
Was able to get a $400,000 student loan for his third PhD, and then was able to get a $1.2 million SBA 504 loan for a building, but couldn't get the $200,000 just to expand the current business. Yeah. And no offense, buy a bunch of shitty equipment that has no resale value, and it's there's no value to it. Yeah. But the student loan thing, they're always going to give you. They're always going to give you that one. Yeah. And then the hard assets with the building. Yeah. Do you think is there like an initial, like, hey guys, if you're going to go find a CFP, you're going to work with us or whatever, do you ever factor real estate into a portfolio, or is it like Absolutely. We're just looking at U.S. stock, international, and bonds? I think
real estate should absolutely be in a portfolio. And I think honestly, as the investor, you need to invest in what you know as well. Yeah. Right. If you know real estate and you're willing to do the work and what it takes, you can get a hell of a return on that. Mm-hmm. But I think what happens is people go all into real estate and have no diversification. And then when they don't get rents for 3 months, 6 months, and now they're not be able to make their bank payments. They have no liquidity elsewhere to bridge that gap.
Is there a certain, so we talked about with your business, maybe you're not needing 6 months. When you're going to start investing, should you have a certain amount of cash on hand, like in as far as personal expenses, home expenses, things like that? Is there anything you recommend there?
Yeah. And honestly, it kind of depends too, is if you're a solo rider and can move in with your parents, fuck it. I guess you don't need a whole lot.
Yeah.
When you got 3 Chitlins running around and a house, you might want to be a little bit more conservative on that number.
Yeah. No, that's super. It's accurate. What is the average, like, what's the average age of retirement now? Do you guys know that?
Yeah, I couldn't tell you. I mean, it would be in the 60s.
It's in the 60s. And then is there what's the golden, FI, financial independence number for people? Yeah. What's like recommended?
Well, I hate giving you the depends.
Yeah.
Because everybody's lifestyle. So like, for example, I like to look at your net worth versus your spending.
Mm-hmm.
So if you have $1 million net worth and you spend $100,000 a year, you could live 10 years without earning another dollar. That's real. That's what we know. Okay. So if you want and think you have a life expectancy and you only need 10 years of income, go ahead and retire. But you may want 30, 35 years of that net worth versus your income to be able to see through a successful retirement.
Yeah.
So it's going to depend on how much money you spend of net worth annually is going to depend the success and the longevity of your retirement.
Yeah, that's really interesting. And a quote came to my mind. I want to make sure I don't butcher this. For everyone listening, wealth isn't a number. So I asked for a number and I was kind of setting this up, but wealth isn't really a number. It's really a ratio of what you generate in income versus what you spend.
Yeah. I call it financial health. It's financial health. Are we doing the right thing? Are we financially healthy?
Yeah. Calories in, calories out. Yeah.
Yeah. That's how I like to monitor and work with my clients of, are we doing the right things? Everything else is going to work itself out.
Yep. And I've been saying on this wealth management, because I think this is the one that like most owners don't think like, well, I'm barely making any money in the gym anyway. I shouldn't even worry about the retirement thing. Like 6K is your Roth limit currently right now.
Yeah. Yeah.
So you can invest $6,000 into a Roth IRA and that is all tax free until there's a event in which you pull that out. But $6,000 at $500 a month, $6,000 a year. I mean, even if, so if you're planning to be a gym owner for a decade, which most of us are like, well, yeah, I hope I make it a decade. Yeah. I mean, $60,000 isn't anything, but I wanted to really harp on this. Like there's no right time to start. And there's no well, if I think everyone's embarrassed. Like if I call CPA and tell them I have $200 for them, like, do you guys have minimums?
So the way I kind of mentioned earlier, I designed my firm so I didn't have to have minimums that I could charge a financial planning fee and still have a successful practice and give good advice. So I can offset the minimums by charging the financial planning fee.
Got it.
And kind of, I think where you're going with this, I worked in a big wirehouse, big financial firm before I went on my own to work with entrepreneurs. And some of my wealthiest clients never made 6 figures a year. Now, I know that's a different era. Sure. I'm talking my 70 and 80-year-old clients had millions of dollars and never really made more than 6 figures. So you can't tell me we can't still become wealthy with the amount of money that we're making. We're just not doing the right things with it. It's
just like how you said, during COVID, you switched this and changed that. You just made your revenue go farther.
Got it. Yeah, absolutely.
So it's not always about the big revenue number. And I think you were hitting on that. It's like, start somewhere. That $6,000 is going to add up over time. Yes.
And what's 100% going to add up over time. And it's also one of these things that once you've gone through it, I remember when I first started doing it, and it wasn't obviously, I wasn't throwing the CFP a ton of money at the time. Mainly, I think I have a high level of a speculation of like anyone like that, right? Like it took me a while to get a CPA, let alone a CFP, but I think it was also the second I did that, and then I was actually able to start watching someone else's work. And I had been playing around. I've been doing my own index fund thing. So I was able to watch what my money in the Fidelity account been doing. And then I could watch what's going on in the Schwab account that he's running. I'm like, all right, I'm not even going to tell him that I've got this other thing. I'm not going to mention this other thing over here. I just want to see how I think like I know what the hell I'm doing. Right. And I'm not into it. I don't have a Robinhood app. I don't get into day trade. I don't do any of that. I just had this very safe, basic rule of investing that I've followed. And it was just super interesting to watch someone else's handiwork. And it's like, oh, like, was it a huge difference? No, but it's like, he's hitting me up with thoughts and emails and things like that I'm not even thinking of.
Right. Like say moving a little bit more to energy at the beginning of the year.
Sure.
Right. Maybe move into more inflation protected type investments that you're just not going to be aware of.
Yeah. Yeah. Like we had big conversation.
Do you think you had like a used car salesman sort of like mentality behind this person or the persona of that field?
Maybe I can't think of a single movie I've ever seen about a nice CFP who like comes in and saves the day, like the high school football coach narrative that we could think of, or like I can't think of the Denzel Washington walking into the inner city mixed school with segregation issues and making it all better. There's not that movie. Disney needs to make a movie about a CFP who like earns my trust.
A real planner.
I need less Gordon Geckos.
I don't think it would make many sales
because a lot of the success is not the product or the investment, it's the planning and what you do over time. But that's so fun.
It's funny too, because like you really think about it and you're like, it's honestly, it's just the 1%, the 1.25. It's like, I don't have to Google it and YouTube it and then sift through all the BS and come to my own conclusion. And I typically am like, I'm a guy, I'm not handy at all. I don't hang things. I don't use hammers. I don't use tools, period. I'm just worthless when it comes to that as a human. And I hire people to do that. But when it came to my money, and you guys probably see this, I was just way more reserved with it. I was like, it's here, it's mine. I worked really hard for it. And I've worked hard to make it. I'm going to work hard in my own due diligence and, your search to what do I do with it? I think small business owners, that's probably a narrative and a mindset a lot of us have.
I think a lot of it goes back to, I think we overestimate what we can do in a year and underestimate what we can do in 10.
Yes,
and
I agree.
Do you remember the MC at Tim's event?
How can you forget? Yes.
Oh, I forget his name. Oh man, it was phenomenal. Remember the penny strategy that he put up there?
Yes, I do.
That's what happens over time. Because you get a 10% return on $6,000. That's nothing sexy.
Sure.
You get a 10% return on $1 million. That's getting pretty sexy. Yep. And then it can compound. And you saw the penny example. It wasn't until 7/8 of the way done through the whole month did you have any money.
Yeah.
So I think
it's when I think of like basic investment advice, you always hear like the three fund portfolio with your domestic, your US based stocks, your international, your bonds, things like that. And then you got this glide path that's going to change it as you get older and you're going to be more conservative. And that's ultimately where I think the CFP really comes in. And the thing that's super interesting what I like about what you guys have done, when I have to connect my accountant to CFP, there's an email that I have to initiate and I got to hope they play nice in the sandbox.
Yep.
Right. And I'm even more complicated. My real estate company has one CFP. This WTF has a different one. And it's just like, you got to always hope that these professionals play nice in the sandbox together, because sometimes they don't always. Bringing it in-house, obviously with you guys, there's probably a nice, in gyms, I call it like your gym needs to have a unique belief in fitness, right? It has to have something unique that it does and that everyone that works for you believes in wholeheartedly. Do you guys have, theories or principles and stuff like that from a finance perspective when you're working with fitness entrepreneurs that are just just common that we stick to, like we do? Like, what does that look like?
I mean, I feel like where you're heading with this is, well, to answer your question, yes, we created the umbrella. So the journey is people come in needing help with their finances. We get this finances put together. There's some tax strategy. There's some extra wealth. And then obviously they need a wealth manager. And then me as the CFP, I'm looking at every tax return before they actually get filed, because there might be something we still can do. And I found several opportunities this year by just reviewing, because the tax code is kind of silly, man. Like you earn over a certain dollar, it phases out certain deductions, where if you put an extra dollar into a deferred account, you can get that phased back in and get more deductions. So having that communication and the way our businesses are set up, I think is a game changer. We don't have to worry about the CPA filing without communicating with us, or just the emails back and forth, right? It is a lot simpler. But maybe to finish on your question is financial principles. Yes. I mean, we practice those through our onboarding process with clients to try to give them an idea of target ranges that you need to be hitting on. And I think that makes us unique too, is because where we're in the health and fitness space only, we're able to benchmark. Do you know how powerful that is? If I can benchmark 50 gyms and say, you're in the 72nd tier, like you're in the 72nd percentile of all the gyms, you're doing pretty fucking good.
Yeah.
Or we can have that conversation. You're in the 20th percentile. What levers do we need to pull in business?
Yep.
Right. So we have the benchmarking capabilities, which makes us pretty unique.
It's interesting where you guys are at with the combined firm as far as that goes. How do you feel about how do you feel about the robo traders and the automatic stuff like that? Is that something it serves a purpose for a certain kind of client, or is this something that, trainers got this in 2020, so AI is going to replace the trainer, right? Kind of scenario. How do you think of AI and tech coming in? Because it can time the market a little bit faster than any one of our brains can.
Yeah, but I don't think you can ever replace the human. They're never going to know your family, your personal situation. They're never going to know that you're going to buy another gym this year.
Sure.
They're not going to know your tax situation. They might not know you have a special needs child at home. There is investing your money for a certain return. And I think, performance wise, whatnot, probably okay. Expense ratio wise, probably okay. But they're not going to be dialing it in for you at the time you need it.
Got it. And how much right now do you still do? Shawn, are you still work? You're not with are you still with the big firm as well? And this is
no, we went solely out on our own in 2018 with both firms. Yeah.
Very cool. Very cool. How much did you guys find? Is there a lag in getting clients over to the wealth management side from the CPA side?
I would have to say the CPA side's more immediate.
Sure.
And I think
because everyone has to deal with that every year.
Yeah. And I think a lot of clients come to us, two reasons. I feel like they're starting to be more successful and they're getting anxiety of maybe they're not doing certain things right and there's red flags showing up. So that's why they hire us, or they haven't touched their books in 8 months and just need to get it cleaned up. We've had clients come to us that hadn't filed tax returns in 2 or 3 years. Well, we need to get this cleaned up and get it going.
Big time. And I'm such a big believer when it comes to content. You gotta have a proof of concept, and the proof being the operative word there. And it's like, man, without, you need everyone's permission. It's like, man, how could I blow up this business on social media? It's like, I would need screenshots of your client's Vanguard account showing what's sitting in there. And then underneath, just creating a baseball card. Stu, gym owners for 15 years, started investing $250 a month in 2007. And now it's this. And someone would be like, fuck, I can relate to that. That's like me. Yeah. I can do that. There's one guy on Instagram doing it great. He's funny, but he's like this nerdy dude. It's like personal finance guy or personal finance clubs. He was Jeremy something or another. And he makes these great Instagram carousels and stuff like that someone could look at it and be like, oh, that's me. I make $42,000 a year and I have 2 dogs. And I'm going to invest $425 a month, and I'm going to get a job with Uber, making an extra $300 a month. So now I have $725 a month to invest. And in year 40, this is what I could potentially have. And, but yeah, no, I was like, you guys, by the way, where I was going, that you guys have done a great job in social. I was just look, when I was looking at you guys originally, I was like, man, it's like, what's the thing that would make me if I'm a potential gym owner wanting to potentially work with them, that would just make me, yes. It's like, I'd have to see a proof of concept that I'm able to point to and say, that's me. I am that person. I don't know. I always get back to just talking about content and marketing ideas.
So you're talking, Amanda will be someone you want to lean on that, because social is not my skill. It's
well, it's kind of the Beauty and the Beast type of situation. Shawn's the brains of the operation as far as getting under the hood and doing the math and being
the technical
nerd. And I'm the dumb gym owner that's
Like, honey,
no offense, I hope, but
but that's important though. Businesses that have partnerships in which they both have the exact same skill set normally do poorly.
Yeah.
Normally do poorly. You need a yin to the yang, and that's where it is. All right, guys, listen, if anyone's been listening to this and they are picking up what you're putting down, they are in the fitness industry, this is something that they believe they need help with, or they want to learn more, what is the best way for them to get in contact with you?
Yeah, absolutely. So they can head over to FitCFO.com and they can go over to our contact page, fill out the little form there, and then that actually comes over to me, and then I get you set up.
Awesome. Yeah. And I'll include links and all that for everyone listening in the show notes. But guys, thank you so much for coming on the show and taking the time out of your day today. I know you're busy, and I hope you guys have a great rest of your weekend. If we ever get a chance to share a stage again or anything like that at Tim's events or anything in the future, we'll definitely we'll make some more time to hang out.
Awesome. Thanks, Stu.
Thanks, Stu. Appreciate it.
Absolutely, guys. Thank you. And hold up.